Guys, in today's video I'm going to be going over my Robinhood portfolio. Now it has been a couple months since I've done a video on this, and I'm going to tell you why. Now when I notice the market is getting a little bit iffy, a lot of people would just buy more shares when it gets to a bottom and average down. In my case, I actually sell my positions and get out completely. Hold my money in a cash account, and then when I see that the markets are correcting, adjusting, and potentially I wait even longer, so when it does go up and has kind of this cup at the end on the bottom, and you start seeing an upward trend, that's when I start buying into stocks again. So it's kind of pointless to share with you the last 3 months of my portfolio when it was only like had $30-40 in it. Now I did keep a few shares of GLAD, Gladstone Corporation, just to keep a little bit of dividend coming in. But as you can see with this strategy, I was able to keep all of my profits that I made from last February up until, let's see, right around September 20th. That's when I noticed things were starting to get just a little bit weird in the market. I did take a little bit of a hit here from 507 down to 483. It looked like that was a low. So I did take kind of a bit of a hit. When that happened, that's when I started selling off all my positions. And so it just kind of stayed at this kind of point all November, all December. And it's going to say I had this much money in, but it's because it was in my cash account. So it was in the Robinhood app, but just wasn't in any positions or stocks. And as you can see, it just hovered there, had a few cents of dividends coming in, and then right around January, I started seeing some uptrend patterns on stocks, and boom, that's when I started buying, and it started going up. Now, as you can see, that's what I've been doing here. I bought in around December 30th, January 1st, started getting an uptrend, and we'll go over those stocks in a second. And then I took a bit of a hit today, actually. I'm up 16 for the month. I was up 10, almost 11 for the week. And then today it is down a little bit because it is Monday. I'm down almost $6 or 1% of the portfolio, but that's okay. I'll take 1% over 26% for the year. I have nearly quadrupled the normal average of return of 8%. Okay, not quadrupled, tripled. I tripled my return of the average of only 8% annual and made 26%. So I'm up $107 compared to only 8%. Wouldn't be very much, would it? So let's go over some of these shares. I like getting rid of these. A lot of good information. And as you can see, we'll start off with a couple. Now, Fit was a free share. Snap was a free share because someone signed up with my link. If you guys are watching this video and you haven't signed up with it before or ever used Robinhood app, I strongly recommend that you give it a shot. Now, there's a link below this video where if you sign up with my link or one of your friends' links or family members' links, you decide you and that person you signed up with their link would get a free share. Now, my highest share was $179. It was Facebook, and I like to say that because it encourages people to try. Now, I went from 0 to 1,000 in 32 weeks because I got literally like 20 free shares. I was asking friends, I was asking family members, sign up. It's this awesome app. You put little bits of money in it, $5 a week, $10 a week, whatever you want, and it slowly builds up, and over time your positions add up as well. Anyways, let's get back to it. GLAD or Gladstone Corp. I have 2 shares of those. Those pay a monthly dividend. Gain, I have 4 shares of that, and that pays monthly dividend. CHY, TWO, APLE, those all pay monthly dividends. NRZ, LADR, AGNC, UMPQ, STWD, PTLA, TMU, Main Street Capital, PFE, General Mills or GIS, HIG, and ATVI. Now, There are a lot of dividend. There is a lot of stocks in here that do pay dividends quarterly as well as monthly. That's kind of what I like. I like dividend portfolios. But again, guys, that's what you see has been paying off. I've gotten dividends and then reinvested them, gotten more shares, gotten more dividends, and it's been a great journey. It's been a lot of fun. I do have a couple of speculative stocks. I do have a few technology stocks. But again, guys, this is a really good little portfolio to have. I got a bunch on my watch list. Just like you're watching this video now, I like to watch other people who have, $1,000, $10,000 accounts with Robinhood and see what they have. And they have, a lot of these shares I want to get in on. A lot of great companies, and I'm just slowly building my portfolio up. I've had in the past. I've had a lot of these companies in the past. In a way, I'm kind of more like a short-term trader. I know people would probably argue that I'm going to pay a little bit more tax. Yes, I might pay a little bit more tax because I'm getting in and out of positions in a shorter amount of time. But if you hold these positions long, and you hold, say, Microsoft for a year, you're up, say, 12 or 15% for the year, and you take one big hit in a correction, or people are saying a stock market crash. It was more of a correction, and then boom, you lose 10%, and you only make 2% for the year. I don't like that. I like to sell at a high point. I like to get out when I see that it's overbought or it's oversold. I will decide from there. If it's overbought, I will sell, lock in profits, and then pretty much instantly it'll just drop back down. Once it gets to an oversold point or a low point, I'm like, okay, this has actually gotten pretty low. Boom, I'll buy again, and I'll just ride it all the way back up. Now, I like doing stuff like that because you can really lock in more money that way. You could average down and basically do, in a way, the same thing, but you don't want to average down your losers. If you're down on a position more than 5%, you really got to start thinking to yourself, do I keep this stock or do I sell this stock and move on to another company? Remember, if you're on a burning ship, are you going to stay on the burning ship and let all these other ships pass you by? Or are you going to get out of the burning ship as quickly as possible, cut your losses, grab as much stuff as you can that's left from your profits or your losses, and get out and jump onto the next ship that's moving? Because if you stay on that burning ship, guys, not only will you lose all your money, what'll happen? You're going to drown. And that drowning becomes debt. And debt you will never get out of. So guys, be smart when it comes to trading. Know what you're doing. And research. This is what I do these videos for. I do these videos to show people just like you that are watching how simple it can be to buy a few shares for $6, $10, $15. The biggest thing right now that you are doing wrong is not investing and not putting money into the account. So just do it already. Sign up with my link or somebody else's link. Don't even use a link. I didn't know there was a link when I first started until after I signed up. So boom, I lost one free share right there. But don't let that discourage you. I have over 40 free stocks right now from tons of people that are amazing, and they're just starting their journey out to investing. It doesn't hurt to put $5 into your account every week, or even ask your friends and family to sign up with your link and get free shares that way. And don't forget, guys, if you like this video, smash that like button, subscribe to my channel, and don't forget to say later to the little fish there. Alright guys, you have a great day.